Hey guys, welcome back to a new video on the channel. Now in this video, we are going to be discussing and taking a look at some high dividend paying ETFs here in the UK. And the reason I say in the UK is because these do exist in the US. So if you are watching from America, they do exist over there, just in a different form. This is going to be specifically targeted for UK investors. I'm personally a UK investor, and these funds have just sort of been live in the UK for the past few months. So we're going to be going over those today. But before we get into it, if you could please hit the like button, subscribe down below if you are new, and turn the notifications on. I am trying to build this channel pretty high just so that we can get the word out and sort of share my investment journey. If you don't know a bit about me, I'm 23 years old. I started my stock investing journey initially when I was 18 years old. So as soon as I hit 18, actually on my birthday when I was 18, I signed up for brokerages in both crypto and stocks. So I was a pretty, let's just say, nerd, I guess you could call it, right? When it came to investing my money, I knew the power of compound interest, so I started pretty early. But um, today we're going to be talking about some of these high income paying dividends ETFs. Now, these are on the riskier side because they are high dividend paying, and of course, they are pretty new, so do keep that in mind. Now, if you want simple investing, simple long term, of course, I'm not a financial advisor, so I can't advise you, but buying something like the S&P 500 is the best bet for you. I first started investing in the S&P 500 way back here. Unfortunately, I've sold a lot since then. I made some profits and sold it and bought and invested in some other cash flowing businesses. But it consistently provides good returns. So if you are looking to invest for the long term, just something like the S&P 500 or the All World Fund is good to go. But we're going to be specifically talking about some high yielding ETF. So let's just get straight into it. I know that was a long intro. Apologies. It's probably going to be a bit of a longer video because I really want to cover these. So these are IncomeShares ETFs. Okay. Now IncomeShares essentially, let's take a look here. Okay. IncomeShares are essentially top stocks here. The Tesla, Amazon, Google, Meta, Microsoft, Coinbase, Apple, Nvidia are the single stocks at the moment. What they're doing is they are sort of buying and selling options on these stocks. So they're a hedge fund or they're a fund that have cash through these ETFs, and they will then go ahead and buy and sell puts and calls on these stocks. So if you don't know too much about options, then do take a look. As you can see, they currently have 12 billion traded in 2024. So they are fairly, active. But you can see here all of the different products that they have here and the option strategies. So IncomeShares Tesla, they are a covered call here. Their expense ratio, you can see the fees here aren't too much. They're about between 0.45 and 0.55%. So slightly on the higher side if you compare it to something like VUAG, where it's about 0.07% a year, something like that. But this doesn't matter too much in comparison to what they have been providing over the past sort of few months. So let's take a look at the first one here. So this Tesla options ETP, which is an exchange traded product. So not an ETF, but an ETP, exchange traded product, a bit different. An ETF is an exchange traded fund. This is an exchange traded product. So there's a bit of a difference there. But this essentially is focusing on Tesla and buying and selling covered calls on this. So you can see the distribution yield that they've been able to pay out so far is around 92.65%. Now that's an average over the year, which is absolutely insane on this. Now these dividends will change quite a bit, and this depends on how much cash they're making from these option strategies. So essentially you're investing in basically these guys being able to provide income or make money through options trading, and they have a team that does it for them. Now, IncomeShares are by Leverage Shares. Leverage Shares is the company that owns IncomeShares, and these guys have been around for many, many years. So I'm starting to put some money here to try and gain some yield on these. Okay, IncomeShares, Nvidia here, options ETP. So you can see this is a same thing on Nvidia, and that's currently getting on average a 26.85% yield. Amazon, again, 9.33. Apple here, 4.78. Google 14.32, Coinbase 162%, which is absolutely insane. Now, of course, that's just because there's been some good months. That's why these numbers are propped up. This will change pretty much every month depending on what they make, and they'll obviously average it out. And then they have Meta here, which is 14.36. This is Facebook. Microsoft 10.38. Nasdaq 100. And these are the two that I'm mainly interested in. The Nasdaq 100 or QQQ is 64.3%. And then the S&P 500 SPY 41.1%. So these are the two that I'm mainly interested in. And then, however, I do have some investments in these individual ones. Of course, the individual stocks are going to be more risky than something like the S&P 500 and Nasdaq 100 that they're sort of working on. But you can see cash covered put on both of these versus covered calls on the other single stocks. And then we have a gold and yield ETP here at 2.81%. Now this is decent just for some exposure to commodities. Could be a good way. But yeah, I'm just sort of introducing these today. And if you're interested, I will go ahead and make some more videos detailing this. But I found these, and shout out to a guy called Cashflow King. He's the one that introduced me to these. But these are the brokers you can currently purchase these products on. It's Trading 212, IG, Interactive Brokers, AJ Bell, HL. I've heard of Swiss Quote, but I haven't heard of these other two, so do keep that in mind. Now, of course, you have the FAQ, which you can read over. You've got the strategies here, which again, these ETPs commonly use covered calls or cash secured puts to generate income. So they are options trading. Essentially, what you're doing is you're investing in these guys being able to successfully, make profitable options trades on these stocks is basically what you're doing. And this is the income that they make. They pay out in a dividend yield. And yeah, you can see that if we scroll down again, we can have a look at risk and performance. What are the main risks? Market risk, the value of the underlying asset may decline. So stuff like Tesla, Nvidia, Amazon obviously may go up and down, which is obvious, right? Options risk, the option strategy may not perform as expected, which is, again, very true. Monthly distributions may vary or decrease because, of course, how much income they make, that kind of thing. Depending on jurisdiction, distribution may have different tax implications. So, of course, you've got taxation risk in getting taxed on your dividends. And you've got the specifics here. Do they use leverage? IncomeShares ETPs do not use leverage. So this is not to be confused with their main company, which is Leverage Shares, which are leveraged ETFs. However, this IncomeShares do not use leverage. Okay. So what is the yield on IncomeShare ETP? The yields vary depending on market conditions and the success of the option strategy. Check the latest fund fact sheet or website for updated yield information. Can on European investors? Yes, if their broker provides access to European exchanges. Which broker supports? I just mentioned that. US withholding tax apply. IncomeShares, basically, they're based in Ireland. Distribution to non-US investors are typically not subject to US withholding tax. Tax treatment depends on which the investor's residency and local regulations. Consult a tax advisor for specifics. So that was a lot there. And this is a lot to take in. But the main ones that I'm interested in, if we go to Trading 212 here and take a look at my pies that I've currently set up. So I've got two pies here. I've got the ETF pie, which is just I've called it ETFs because these are based on the Nasdaq 100 and S&P 500, which are ETFs. And I've just got that split 50-50. I currently have £500 in here, but I'm doing another 500, so that's up to 1,000. And then we have these individual. Again, I only have 100 in here. I put that in simply when I made this pie, but I am putting in another 150. And this is kind of how I do want to structure it. I want to structure it where I have 75% in the ETFs and 25% in the individual stocks. So yeah, that is how I probably want to structure it there, just to have more security when it comes to these ETFs, the ETF version, so the S&P and the Nasdaq. So that is where I'm looking at putting some money in. Again, I only have 250 in here. So again, 1,000 of that is in the shares and in ETFs, and the IncomeShares is going to be the individual ones. So Coinbase, Gold Yield, Nvidia, and Tesla. However, I may increase this and go ahead and put on these other ones. I don't think I've got Google in here. I do not have Google. I don't have Meta. I don't think I've got, do I have Tesla in here? Yes, but no Meta, Microsoft, or Apple. So these are sort of the main ones that I have at the moment. I will probably increase these though, just to have, again, a little bit more of a balance in between all of these. So we will go ahead and do something like that. So let's go ahead and take a look on the website here to see if there is any. Let's go and take a look at some of these dividends. So we're going to be focusing on the S&P 500. This is the main one that kind of, that speaks to me the most. I like the most because my main investment strategy for the next few years at least is going to be the S&P 500 as well as an all-world fund. So if I can get dividends and 41% on this, then that is going to be pretty big. So this is how the investment works. Okay, I'm not going to read over everything, but this is the distribution calendar. Now, the reason this is pretty risky is because these funds only started on the London Stock Exchange on the 30th of September or in September. So you can see how the dividends have been paid so far. If we go to 2025, you can see this is how the distributions are made. Now, the good thing is all of the distributions are made at the same time, which is great. So if you have all of these, for example, you have a pie split between all of these, you're going to get dividends for each of them at the same time every month. And that's just, again, for their accounting purposes and all that good stuff. So to get a dividend in January, you need to have the stock on the declaration date is the 31st of Jan. The X date is the 3rd of Feb. The record date where they record it is the 4th of Feb, and the payment date is going to be on the 12th of February. So we've got a couple of weeks yet before we get the first payout or the first dividend, and we'll see how that yield is looking. But we can see from here, in September they had a distribution per share of 64 cents. So if we take a look on Trading 212 and have a look at let's go over to this one here and take a look at max returns. You can see again, September they kind of started. So in September, we can see that the share price, if we take a look here, the record date was the 2nd of October. So if we take a look at that here, so the 2nd of October, so let's say you had money in here, it would have been £7.40 per share, and you got 64 cents. So how much is that in pounds? 50 something p, maybe 60 something p. Yeah, 52p. So if we do so let's have a look to see how much you would have got. So divide that by £7.40, and we times that by 100. That is the yield for that month, which is a whopping 7%. So say you had £1,000 in there, you would have got £70 dividend that month, which is absolutely huge. Of course, if you had 10,000 in here, you would have got 700, etc. So you can see how quickly these do scale up. The downside to this is that these guys do not focus on strategy. They do not focus. They do not strategy. They don't focus on. They don't focus on growth. Okay, the main sort of focus and attention is on the income directly. So if that's a big sort of turn off for you, I guess, then obviously do keep that in mind, that this is specifically for income or focused on income versus everything else. So again, if we take a look at something like Nvidia, same sort of thing. They don't really focus on, although it is up 3% since it started. If you take a look at Nvidia itself, obviously Nvidia's up a lot more than 3% since July. So do you keep that in mind? I would definitely keep that in mind if that is something that you're interested in. If you're interested in growth, then these things probably aren't for you. They are for people that are interested in income. So again, it kind of just depends on what your strategy is, income versus growth. I have my growth portfolios where I'm investing consistently every month into the S&P 500 and other ETFs. And then I have this, which is going to be a smaller section of my portfolio, which is going to be for income. And then I can use that income to either keep reinvesting and drip feeding these IncomeShare ETPs, or I could take that and put that into my long-term holds, which is going to be my growth portfolio. But again, it completely depends on your strategy. For now, I've only got £1,000 in here, nothing crazy. So I'm not expecting anything insane, but I'm going to start to keep an eye on these. I've only found out about these over the last few days, and I wanted to introduce these over on the channel. And if you're interested in me making more content on this and giving more information, then I will do that. But for now, I've just put 1.2k into these. I may increase this. In fact, what I'm going to do now is I'm actually going to go ahead and add the rest of these funds in here, so just so that we can just so that we can sort of have some more diversification. So I've just gone ahead and added in the rest of these funds, these ETPs here, for the individual shares. And now you can see my sort of weighted distribution and how that looks. But now we're going to go ahead and invest the rest of this cash here, which is going to be 150. And you can see how that's split. And we're going to click next, and we're going to hit confirm here. So that is how it's going to look. So that will now wait until tomorrow, and then we will have all of that cash in these ETPs here, and we will start to get some income off of them very, very soon. Obviously next month. So I just thought I'd make this video to kind of show you how this looks. Obviously this is a lot of holdings. Now the only reason I've got this much holdings is because these are all of the individual sort of option ETPs that they have. I'm not going in really hard with these. I'm just sort of seeing how well they will perform over the next month, just to see what the dividends looks like before I, put a large amount of money into these things. But I could see me building a pretty large portfolio of these IncomeShare ETPs if that is obviously something that works out. Now, of course, the biggest risk for these guys is that these IncomeShare ETPs haven't been around for very long. Again, September is when they first started trading on the London Stock Exchange. Now, in the US, I believe they've been around for a lot longer. So, that does add some confidence. But of course, things can go a bit different. Now, on their website, you can see like the asset holdings and all that good stuff. So, if you want to do a deep dive like I did onto the sort of assets that they're holding in each sort of product, then I would recommend doing that. But let me know what you think. Have you taken a look at these ETPs? Do you want to sort of have a look more into them? Let me know. But thank you all for watching. I hope you enjoyed, and I will see you in the next video. Goodbye.